Yes, my people, welcome back to my channel and welcome back to my 100k FTMO challenge. Listen, I know it's been a minute, but we're back like we never left, and we're going to pick off exactly where we left off from last time. So in the last couple of videos, obviously it'd been about 3 weeks before we took any trades on the challenge. There was just nothing showing up or nothing I was happy enough to take the risk on. So the reason why I've been away and not uploaded in almost like a month is because I've been traveling. Last month I was pretty much not here, so that in terms of filming and stuff like that was a bit more difficult. I did actually take 2 trades while I was away, both losses, but we'll speak about that and we'll go through the trades that I've taken since the last time I actually placed a trade on the account. So in terms of trades on the account, the last active trade that we actually took on the account was this one, if I'm not correct. Yeah, 14th of March, which was a 0.5% loss. After that, the next trade we took was the next month, so literally went almost like a month without taking the trades. And imagine the next trade that we take is an L, the one after that is another L, and then followed by a break even, and the last 2 trades recently this week have been 2 winners. So we're going to go through those. Hopefully this video is not too long, and without further ado, let's get straight into it. So what we have here, this was a GU trade, and as you can see, looking at this trade, every other trade that I took on this account was an EU trade. I had been monitoring GU at the same time, but most of the trades I was taking on EU. But while I was on holiday, I decided to actually place a trade on GU. So, and there's a few things where I feel like I definitely could have done better with this already. If you look at the reasons here, that's not in. I was on the lower time frame, which is not the worst thing in the world. I've backtested this, but for me, I prefer minimum on my entry to be on a 5 minute. Nothing really lower than that, because I get the most confluence. Obviously, the higher time frames that you go up, the stronger those time frames are for your setup. So as you can see, I was trading on the 1 minute, used the 1 minute liquidity sweep, 2 minute market structure shift, 2 minute fair value gap, and 2 minute displacement. So if I pull up those trades right now, so this was the before and this was the after. Right, so just looking at this screenshot as it is, in my mind I was thinking that, and the way I analyze this is that price is showing bullish intent this week, and it was retracing back to the high time frame premium array, which is an order block, and I was looking to buy the retracement leg back up into the premium. So on the 4-hour time frame though, GU was in the consolidation range, so I knew I could have got wicked out, and if I get taken out, it's because the price wants to take out the Asia lows, and that's just a risk that I was, happy to take on. Unfortunately, as you can see, it did not end well. I actually got stopped out within the same session, and which is a bit annoying because this was the first trade that I took on GU instead of EU. And if I'm being very honest, I remember putting in the notes after self-reflection that I was kind of like frustrated that I had not taken in a trade in such a long time, and I looked on a smaller time frame to get this set up, which is not something that I do. But as you can see, I was expecting the price to come up into this buy side liquidity up here. That was the higher time frame order block I was talking about, and once price made that impulsive move up, I was looking for the retracement leg back into here, tapped into that order block there, as you can see here, and once it did that, this looked like the market structure shift to me with a 1 minute fair value gap, and I was just targeting that high up here. In true reflection, that's not the best swing high that I was looking for in terms of break, but we had this one here at the 8:30 open. So when it did that because it broke up here, left the fair value gap, and then broke this swing high here. So at that point I was thinking, okay, if it's broken that one and that one, then it's got a good potential for it to carry on going higher. All I need for it to come down is to tap into that 1 minute fair value gap and then go above. As you can see, unfortunately we didn't get that. It just started selling off. So that was the first L on that account, which is fine. We move. Second trade, while I was on holiday, this is the EU trade. This one I went back onto the high time frame, so we had a liquidity sweep, 1 hour market structure shift, and as you can see, kind of broke my rules because we had no real displacement, and I'll show you what I mean. So this is the only screenshot I got because I didn't manage to get the 4. And yeah, as you can see, which I'm going to give you 2 examples of what displacement should actually look like. As obviously on my notes I put that we didn't get like a real displacement, which I knew at the time, and sometimes it does work where you don't have that displacement and price still taps into the fair value gap and still sells off. But ideally, when you're looking for these signatures within the markets, you want that displacement to really show you that, okay, there's active players in the markets, this is their signature, this is the footprint, and this is where I can give myself more confidence to take the trade. So I was just happy that I had a smaller risk on the trade, even though, you know, because I was on holiday. Traveling and trading is possible, but you really have to be attentive. You really have to be in a good routine. I was in a good routine when I was back home, but in terms of looking at the charts and actively, you know, monitoring the charts, that wasn't part of my daily routine because I had like so much going on. I wasn't really checking as much as I normally would do, so I felt like I wasn't really in sync with the markets. But as you can see, the reasons for, we had a return into this high time frame PD array in the order block, tapped into it, sold off a little bit, but that was literally just an inducement. So when it broke that swing low down here, I saw that daily fair value gap over here, I thought, okay, it's on a higher time frame, so this should play out. And as you can see, got tapped in and then started trading up and then stopped me out. In terms of displacement, which I was talking about before, this right here is a perfect example of a displacement candle. As you can see, it's impulsive, it's large, you know, there's no mistaking it from these other candles over here. It's a large candle, you can definitely see that impulsive to the upside. Again, over here, another displacement candle where it's impulsive in either in one direction or the other. Over here, you have a bearish displacement candle, as you can see, very large candle, leaving that footprint in price where it leaves a fair value gap, which is beautiful to see. Another one here as well where it's a large displacement candle compared to like these other candles over here. So if we had that displacement over here, then it would have given me more confidence, but because we didn't get it, you know, hindsight is 2020, and you know, I really shouldn't have entered the trade, because with my trading plan I do look for that displacement after the market structure shift and the run on liquidity. So that's just one thing that I definitely could have saved myself from a loss on this trade by waiting for that displacement, or because I didn't get it, then not entering into the trade. But you know, every loss is a lesson. So we move on to the next trade, which was a break-even trade. So I can get rid of that. So yeah, this trade here on EU, was I back then? Yeah, so this is the first trade after I got back from holiday, and I'll pull up the before and after of this, show you guys how it ran. Okay, perfect. So my reasons for getting into this trade here was that the previous day low was swept. We had a 5-minute market structure shift, we had a 5-minute fair value gap, and a 5-minute displacement. This was the previous day low, as you can see there. You had a market structure shift here on the 5-minute where you had that swing high broken, that displacement candle up above, as you can see, left a 5-minute fair value gap. Just looking for a return back into it. I like how price didn't come up and take the Asian high first. It came back, retraced, tapped into the 5-minute fair value gap, and then I was looking to take price higher. the other confluences I had on this as well is that we were below the midnight opening price, which is over here. On the high time frame, we were in a premium area, so overall we were looking for potential sells. But this trade, I was just targeting the Asian highs as we swept Asia low first and the previous day lows. So I was looking for, you know, the institutions to pair their long orders down here once they swept that liquidity with market orders up here, which would be an Asian high. That was the low hanging fruit into that one. So I was hoping for high prices into New York to see what happens. Unfortunately, I got out. I'm gonna say unfortunately because it was a good trade setup, as you can see after it went up and hit TP. But I got out at break even, just trying to reduce my risk on the trade and my exposure onto the markets. The reason why I did that is because price was at break even over here. The dollar actually had taken out a high already, and I didn't like that because I thought, you know, if dollar's taken out a high and price is at breaking even over here, that might possibly push EU to then take this low again. So I thought, okay, let me just get out of the trade just in case that does happen. As you can see, closed at break even here, and then funnily enough, price came up into New York session, took out the highs as expected. So that would have been like a really nice trade on the account, but it is what it is. Got out of break even. It's better than taking a loss, even though it would have been nice to, you know, have that win and bounce back from the 2 losses. So that was that trade. And then coming into this week, these are the 2 trades that I've taken on this week. So both being GU trades. One was a 0.5% win and one was a 0.12% win. And we'll show you the reasons for that as well. So the reason for this trade over here, as you can see, we had a 15-minute return and rebalance of into a fair value gap, 5-minute liquidity grab of today's highs, 5-minute market structure shifted with displacement, and then you had a 5-minute fair value gap that it returned back into it. So this was the 50-minute fair value gap that it returned to, obviously from this high to that low. We were in premium areas up here, returned to that fair value gap. That was the running liquidity over here of today's highs, and then we had the market structure shift right here where it broke that swing low, fair value gap, 5-minute fair value gap that returned into it. Stop loss was above this high, and we were just targeting down here, to be honest, these lows down here, today's lows. Best thing about the trade as well, we're trading above New York open, so the 8:30 open there, trading above it. We were back at around the midnight open as well, so looking for a price to retest that level. And the dollar was actually showing a lot of bullish intent as well, so I was actually bearish on foreign pairs. With this trade, I think we had really good trade management on this. I went to break even at a good level and took profits on the way, which is something I've started to incorporate, and I should have been doing with all the other trades, but I'm definitely going to start incorporating now, coming into the following week, and I'll explain the reasons for that after. But this is the after. As you can see, very, very beautiful trade. Got into the top, can't ask for anything more. We took 50% of our position down here and then moved our stop loss to break even, so reducing risk and taking it off the table. And then we took another 25% off down here. I did ideally want to take it down here, but in terms of what price was doing, I just thought, you know what, let me just close 75% of it, and then we finally got out with the other 25% down here, which is a very, very beautiful trade. And on top of that, textbook, you know, with great trade management as well. So exactly what you want in the trade. You know, if we held that for a full 1%, I think it would have ran 3.7 R. But overall we just profited 0.5% from that because we took partials on the way. But happy with that. You know, small wins lead to big wins, and at the end of the day, you'd rather take that than a loss. So that was a really good trade management. Happy with that trade. And the last one, so this is the last trade that we took on the challenge. This was taken on Thursday. Was it Thursday? Wednesday. Yeah, we took this on Wednesday, because I remember Thursday and Friday, those bank holidays. So yeah, this is the last. So we took this last trade on Wednesday. This was the before, and the reasons for this trade: we had a 15-minute liquidity sweep, a 2-minute market structure shift with a displacement, and a 2-minute fair value gap that I returned to. On top of that, we had order blockers there as well, so that gave us more confidence to take the trade going higher. And as you can see, sorry, actually this was Friday's trading, it wasn't Wednesday. Yeah, I'm not sure why I put in my journal the 8th, but it was definitely the 10th. This was yesterday's trading. So price impulsed higher from the morning, and we had GU SMT with EU, so I was anticipating continuations into these highs up here. I was expecting a retracement into the order block, which we did have over here, and then it gave me the entry pattern on the 2-minute. Since it's Friday, my risk was lower on this trade. I decided to take 0.5%, well 50% of the trade at a 1-to-1. Initially I wanted to take up above these highs, but because it's Friday, I thought, okay, do you know what, let me take it at a 1-to-1, and then we'll aim for those highs, low hanging fruit. And dollar had actually swept the lows and filled in a 1-hour fair value gap, so the chances of retracement back up, which is most likely to send GU lower. We also had news at 10 o'clock, so I was wary of that. I wanted to go, take 0.5% off and go break even as quickly as possible before the news. I was expecting a bit of injection of volatility, and this is the result after. So as you can see, we took 50% of the position over here, really smart choice, and then went to break even. This was the reaction from the news. It just sold off, and if I stayed in the trade and we didn't have good trade management on this, obviously you can see it would have been a loss, but we didn't get that. We just got break even and a 0.12% gain on the account. Ideally I wanted news to go the other way, but you can never really get what you want in life all the time. And as you can see, just other confluences around the trade. So that was the liquidity sweep that we're talking about into that 15-minute order block. We tested the midnight open. Then you had the market structure shift over here with that order block and the fair value gap. 3-minute fair value gap on there. Return back into it. Price pushed up. Cleared out those highs. Then sank lower. If we look at the price as it is today, this is as of recording on Saturday. As you can see, literally came back, took us out, or would have taken traders out who'd have been long and who would have been trying to hold the longs for up here, I would have been, but managed to take a break even. Came back up, back into the range, and yeah, not surprising for Friday's trading. You usually get that with that kind of price action on Friday, where it just opens, wicks one way, wicks down that the other way, comes back into the range and closes pretty much near the midnight open, which we pretty much had done there. And not surprising for a Friday, but overall I think very good and very positive this week in terms of trade management. Definitely implementing partial take-in, because that's going to pay in the long run, and also it's going to help reduce the risk and take risk off the table, and just helps compound those bigger wins. Because I know definitely in some of the trades back then where we had some of these losses that could have been prevented by either going break even, taking partials, pay myself, and then leaving the rest to run. But in the long run as well, I know it can pay the trader in the future as well, because let's say if you take half of the position while it's in profit, pay yourself, and then let the rest run, you can look to, you know, gain off those large moves. So for example, if some of these moves down here, let's say you got in down here with a trade, if you entered over there or whatever your position is, your entry criteria, and you're aiming for these highs, for example, if you took your first position there, you already paid yourself part of the trade, right? Comes up, takes the high, pay yourself half the position, put yourself at break even. You can then hold, because you don't have to worry too much about if the trade comes back down, if it's in profit, if it takes you out, because you've reduced your risk and you're taking it off the table. You already paid yourself, and now all you're doing is just eating. You're just eating on the way up. So if you manage to hold for all the way up here, you've managed to gain all this profit from here, from half a position. Whereas if you try hold that for a long time, you never know, price might just come back and take you out, and then now you're taking a full loss rather than paying yourself and then riding the wave up here. So that's something I'm definitely going to take into account and implement into my trading, because I know it's going to be a game changer. But apart from that, guys, I'm going to finish the video here. I was going to do a market forecast for the rest of the week in the same video, but I might drop another video tomorrow, so watch out for that. But I appreciate you guys watching and sticking to the end. If you've got any comments or anything like that, put them in the comments section. Would be interesting to hear your guys' thoughts. As always, peace, love. See you on the next page.